Stock sectors, 20 overbought stocks stretched and ready to correct. Okay, so there are certain times in the market that certain conditions exist, and I look for opportunities based on those specific conditions. There are certain trades that work at better times, and you've seen us showing upward momentum, and of course, momentum trades to the upside are the ones that are going to work the best. But there are times like this when the movement in one direction or the other gets very stretched, and that is times to look for the stocks that have the highest probabilities of not being able to continue to the upside, and also the highest probability that they will correct to the downside, and that there's a reasonable risk reward there. In other words, the amount, if they continue to move up with their momentum, would be small, and if they do correct, that you'll be able to capture a pretty good size movement to the downside. So what we want to do is we want to figure out which of the stocks that we look at in our universe that are the most stretched, that have had the biggest moves, and that have the best probability of those pullbacks. The market conditions now, of course, we've had a very long upside move. And there are high risks now of a pullback. And based on the analysis that we do and that we've showed you in here, there are lows that are in sync, that are projected, that are most likely to come in February or March. So that means that the advance that we're in right now, which when you look at the indexes has achieved our upward objectives and time objectives. So in other words, we were looking for an advance into mid to late January and then a decline into February or March. Well, we've gotten now to that price and time where the odds are high that the upside will stop and that there will be pullbacks. If that's correct, then most stocks will pull back. But what if it's not correct? What if the market manages to move up for further and longer? Well, then of course you want to have the highest odds. The ones that are the most overbought are the ones that are probably going to struggle the most or have the highest odds of not making upside ground or even moving to the downside in just some small down days. So, of course, the stocks I'm going to show you, they're all bullish stocks. In other words, they've been in long uptrends. They're all near highs for this period, or maybe some at all-time highs. And these stocks are actually stocks that, after a correction, you'd want to have on your list to buy. But that's not where we are now, not in time and price. Now we're at a point where there's a pretty good likelihood of a pullback. So, if you're a person that's wanted to be a short seller, it's been a struggle, right? If you're one of those or, top pickers, you should look for the best risk rewards. And I'm going to show you how I think you find them. These are stocks that we're going to look at that have the least odds of moving up and the best odds of moving down. And again, even if wrong about the market conditions, these stocks will likely have some corrections. Some of them are timed very nicely with cycle analysis, and some of them less so, but I would say the majority of them are going to align up well with our cycle analysis. We're going to use just cycle analysis, which you'll learn a lot about in here, and we're also going to use the disparity index. Because what we've done as we scan through our over 300 stocks is look for stocks that were at least 10% over their 34-week simple moving average. That's what we key off of in here. You could do it off of the default 13-week, but I wanted to get a little more extremes because the 34-week is going to lag well below the 13-week. So I wanted to show the extremes a little bit better. Going through these 300 stocks plus, it threw off 20 stocks with reasonable expectations of a decline coming and ones that I can target. In other words, we're going to target them to pull back to somewhere around the 13-week moving average, which you will see almost every stock historically does in these conditions. And some of them will come back down to the 34-week moving average, which is pretty steep. So we're going to switch over now to these stocks, and we're going to analyze each one of them. And this time I put the list up in here, and we're just going to be able to click on it for you to see. Here you can see the list and the chart right over here as we're looking at these stocks that some of them you can see on the list have been stocks that you've watched lead the market up very significantly. And of course, if they are upside market leaders, then what they're going to be is corrective market leaders as they pull back. Some of these are only going to give you, relatively small pullbacks, maybe in the area of 5%. And some of them will be about 10%. And again, for people that are, traders, people that are option traders, these are stocks that to me offer high probability of getting these pullbacks. And you could, if you're an option trader, you consider this to be the high probability entry period for credit spreads. You might just do out of the monies to give you a little bit more room in case the market does move up. Now, you remember my short-term analysis says that we'd get a little pullback this week, we'd get another rally into the following week, and then the risks really pick up. So that's one of the reasons that I started to do this today, because I want to get a little bit ahead of what I think is going to be the last rally attempt, which I think is going to come in the next week. So you can see here there are pretty high visibility stocks when you look at these, widely held, and some of them are going to be just slightly overbought. In that category is Goldman Sachs in the area of about 10%, and the winner on the overbought category at 67%, an extreme above its moving average 34-week, is Tesla. So that's the big range. And there are a lot of stocks in here that are 25% above the moving averages. And those stocks, once the investors realize that, the market's correcting, they're going to be selling these, and you're going to get paid on those pretty quickly. So let's take a look at them, and you'll get an idea what I'm looking at. So MA is the first one. That is Mastercard. So Mastercard, you can see, has got nice cyclical rhythms that we have in here. And we're looking for only a pullback of about 3 weeks right there. Right now, if you look at the disparity index, it is 15% above its 34-week moving average. Again, if you put up the disparity index, it's going to give you a default of 13. You can use that. It's the distance above the 13-week moving average. And you can see also that the 34-week moving average, the blue line right in here, it tends to also be a magnet. So when you get something stretched, it moves back towards the magnet. And under most conditions, even Mastercard, which tends to be just smooth on the upside for months and months, comes back and tests that 13-week moving average in every single cycle. You can see it doing it way back over here, and this got down well below the 34-week moving average, and note that it got to about 10% oversold, and then, of course, reversed back up. So this is a pretty good picture of a stock that we have a pretty good expectation in. So I'll get a little closer in here, and you can see that there's the supports in here around 310, likely to about 300. So that would be about a 6% pullback, 6 to 7% pullback, and 13 to 23 points is what we're looking for to pull back in this period. And when you get to a cyclical period of correction, even in a swamped cycle like this, you got to pull back from 255 down to 238. So it was 17 points on the downside. You can see we're up near the high here, so that's a pretty good opportunity. Even a stock like this that's only 15% overbought.